topic. So CPA, December 2022. Question number CPA, December 2022, question number 1C, if I'm not wrong. Question number 1C, if I'm not wrong. Yes, question number 1C. Question number 1C. So what I want us to look at here, is basically the range. So we have range 1, we have range 2, we have range 3, we have range 4, and then we have range 5, right? So within these units, we have 1 to 6,000, 6,001 to 10,000, 10,001 to 14,000, 14,001, all the way to 18,000, 18,001, and above, right? So what I want us to do here, now that you have everything with you, I want you to give me a calculated economic order quantity. That's what I want you to identify. Then, of course, we'll be able to agree on real economic order quantity. So once we have that, we should be able to have what we call total cost. Then you make informed decisions. So that's what I want us to deal with. That is what I want us to deal with very fast. That is what I want us to deal with. That is what I want us to deal with here. I will not tackle the total cost part because that's now application. Good. So let's start with the first one. When you did your calculation, what was the calculated economic order quantity? What was your calculated economic order quantity? Remember, you are to do that by utilizing this formula. Economic order quantity is equal to multiplied by demand times ordering cost divided by holding cost. Some two things must be constant here, right? So you need to get root of 2 times. Were you given demand? Were you given annual demand? Yes. Information number 1, we have 60,000. So that will be constant throughout. Multiply by ordering cost, which is also constant, 50,000. Right? Then we divide everything by holding cost. So holding cost is supposed to be expressed as a percentage of purchase, purchase price. Do we have that purchase price? Yes, the last column there gives us the purchase price. So you need to get 20% of 420, 20% of 380, 20% of 340, 20% of 310. So the first one, you have to get 20% of 420, which will be 84, right? So 20% of 420. So when you deal with this, can you give me your calculated economic order quantity? Rounding off will help us maybe to save on time. So 84.52. Good. How about the second one? Second range. Second range. 8885. Third range, what are you getting? 93.93. Fourth range, 98.37. The last range, what are you getting? 10.742. Good. So that is what we have. Let's now pick real economic order quantity. We said, the rule says you can take anything that is greater than or equal to economic order quantity. The supplier says you must purchase within the range for you to be able to do what? To enjoy the discount or the quantity discount. So when you look at 84.52, that is the economic order quantity, the calculated one, right? Now compare the calculated one and the range that will give you a discount. Is our economic order quantity above, below, or within the range? Is our calculated economic order quantity below, above, or within the range? It is above the range, right? Somebody's talking about below. Between 6,000 and 84.52, which one is the highest figure? Which one is higher? 6,000 and 84.52. Of course, this one here, right? So it is above the range. It is above the range. Now, if you compare this, the rule says you cannot do anything below economic order quantity. So I cannot purchase anything lower than this in the name of going for the discount, right? So what will I do? Because the rule says it must be greater than. The supplier says you must purchase within this range to enjoy profit. So what are we going to do? To enjoy discount. What are we going to do? Someone to advise? Someone to advise us there. So we are going to do what? We ignore. Thank you. Let's go to the second one. So the second one, you must purchase something from 6,001 all the way to 10,000 so that you enjoy that particular discount, right? Now, the rule says it must be greater than or equal to the calculated economic order quantity. If I look at what I have here, is it above, below, or within? Is it above, below, or within? It is within. It is within the range here, right? So if it is within the range and this is the equilibrium point, I will go ahead and actually purchase the exact number of units that are required. Good. Let's move to range number 3. For you to enjoy discount, you must purchase between 10,001 to 14,000. Calculated is 93.93. The rule says it can be greater than or equal to, but not less than. So what are we going to do? Can you give me the real economic order quantity? What you are going to order? It is below the range. So if it is below the range, what do? We purchase the lowest quantity within that particular range, which is 10,000, which is 10,001, which is 10,001. Good. Let's move to the fourth one. For you to enjoy the discount, you must purchase between 14,001 to 18,000. Our calculated economic order quantity, which depicts the equilibrium point, is 98.37, right? So what we have here is below the range. For you to enjoy the discount, you must purchase at least 14,001. And because the rule allows you to buy anything that is above, so long as it is not less than what you have calculated here, then it is okay. So what do? We'll be purchasing 14,001. So that's what you're going to have as real economic order quantity. Let's move to number 5. Number 5, for you to enjoy the discount, you must purchase anything that is above or the lowest 18,001 and above, right? 18,001 is allowed and anything that's above it. If I look at this, the equilibrium point is 10,742, right? So we now want to advise them. If I look at this, it is lower than the range. The rule says you can purchase anything above or equal to, but not less than. So can you give me real economic order quantity here? Real economic order quantity, 18,000. 18,001. 18,001. Great. Now, so can you look at your workings? Can you look at your workings and confirm whether this is what you used? If this is what you used, then of course you have the right answer. If this is what you used, then don't forget the formula of getting total cost. We say that total cost is equal to demand times purchase price plus demand over economic order quantity multiplied by ordering cost plus economic order quantity divided by 2 multiplied by holding cost. So another name of holding cost, we were able to see storage cost or carrying cost. Please repeat the explanation of part 1. Part 1, hii ya kwanza, Is it this one? This one here, are you referring to the first range? Good, we have said, the rule says you purchase greater than or equal to economic order quantity. The supplier says, so this is the equilibrium rule. Equilibrium rule. Then supplier rule says you have to purchase within the range given for the discount to apply. For the discount to do what? To apply. So you have to comply to these two. This is rule number one. This is rule number two. Now let's come to the first one. This is the calculated economic order quantity. This is the equilibrium point. As per the figures given or data given, this is the equilibrium point. So if I purchase 84.52, I will be operating at equilibrium point, whereby we said at equilibrium point, total ordering cost will be equal to total holding cost, right? We agreed on that. We discussed this at the introduction part of this particular topic. Now, so you have to comply to these two rules. If this is the equilibrium point, we want to advise this particular company whether to accept the offer or not. The offer says, if you purchase anything from 1 or between 1 to 6,000, you'll be able to get a discount and purchase these goods at what price? At 420. I believe you're able to see it somewhere there. We have 420 somewhere there. We have 380, if I'm not wrong. We have, let me just refer. 340, 310, we have 260. So you can clearly see, as the quantity increases, the purchase price reduces, right? So that is what we call the quantity discount. That is what we call the quantity discount. Good. So let's come to this part. If you purchase anything from 1 to 6,000, you will be buying these goods at 420. If you increase the quantity by just 1 from the 6,000 to 6,001, it is now reduced from 420 to 380, right? And for you to be able to enjoy that, you must comply with the rule, which says you must purchase anything within the range that is provided here. If I come to this part, what will I do? It says 84.52 is the equilibrium point. If I look at this, 84.52 is above the range. If I purchase these goods, the supplier will not do what? Will not give me a discount under range 1. If I want to purchase under range 1, I will not have discount because this one here is above the range. You must just purchase within this range to enjoy that discount, right? So that is the supplier's rule. Of course, I can ignore this and purchase anything within that range as per the supplier rule. But let's come to rule number 1. Rule number 1 says you cannot purchase anything that is below the equilibrium point. You can purchase whatever is equal to equilibrium point or greater than. That is the rule. You can purchase what is greater than or equal to economic order quantity, right? That's what we have. So let's see if we'll be able to comply with this rule. If I decide to purchase 1 or 6,000 or anything in between, what will happen? I shall have purchased goods below the equilibrium point. If you do that, what will happen? You shall have violated equilibrium rule, right? Good. So the supplier says you must purchase 1 to 6,000 to enjoy the discount. Equilibrium rule says you must purchase greater than or equal to this calculated economic order quantity. So the question is, will you be able to comply with the two rules? Because you have to meet the requirements of these two rules for you to accept a decision or an alternative. So will you be able to comply with the two rules? if you decide to purchase 84.52, will you comply with the two rules? Okay, number one, you will comply with the equilibrium rule. How about supplier rule? You must purchase within this range to enjoy the discount. Will you comply with that rule? The answer is no. So you'll only meet the requirements of which rule? Of equilibrium rule. What if you decide to reduce these units to fall within this range? Let's say you want to now take 6,000 and then you enjoy the discount. When you purchase 6,000, you shall have met the supplier rule. That is correct. But how about equilibrium rule? When you purchase 6,000, it is less than the equilibrium or economic order quantity. And if you do that, you will violate rule number one. And therefore, this option will not work. So what do? We forget about it and we will not go further to negotiate for the purchase of goods within this range to enjoy the discount, right? That is why when you come to this part, we gladly purchased the calculated economic order quantity. Why? Number one, it falls within the range, so it meets the supplier rule. Number two, it is greater than or equal to. So for this case, it is equal to calculated economic order quantity, which meets the requirements of rule number one. That's why we went for the exact calculated economic order quantity as the real economic order quantity. The moment you ignore this, there is nothing to calculate about it. You are not going to waste time to calculate related total cost because you will not, at no given time, will you request for goods that falls within that particular range. So that's why we ignored the first one. Is it now clear to somebody? Is it now clear to somebody? Is it now clear to somebody? Great. So you are to get total cost under this part. You are to get total cost under this section here, right? So the moment you ignored this, there is no total cost to be calculated there. It just remains blank. How about this part? You are to get total cost for range 2, 3, 4, and 5. So if you look at this particular column, which column was giving you, or which row was giving you the lowest total cost? What was your lowest total cost? And under which range? What was your lowest total cost? What was your lowest total cost? What was your lowest total cost? So I'm told within this range, it is this range. Good. How much was it? Please post it down there. Post it down there. Post it down there. 16 to 34, 16. 16 to 34, 603. 16 to 34, 600 and, yeah. 603, 683. Oh, mtu amekosea hapo juu. So rectify that error. 683, great. Now, if you are told to give us the range that will help this particular company to manage the cost of actually taking care of these inventories or this stock, then of course it is range number 5. So in our question, if you look at the question they mentioned, in this sitting, they mentioned range number, right? So this first column represents range number. The second one represents quantity range. So if you're told to give us quantity range, that will help this particular company to minimize on cost of taking care of this particular inventory or stock, then of course the range number is 18,001 and above. That is the range. What if you are told to give us the exact quantity that will help them minimize on cost? What will you do? Exact quantity. Exact quantity. Exact quantity. 18,001. In short, you are being told to give us real economic order quantity, which was used to get this lowest cost. And of course, it is 18,001. Good. So refer to what you did, compare your answers and what we have just analyzed. Were you on the right track? Were you on the right track? Were you on the right track? Look at your workings, then compare with what we have here. Look at your workings and then you compare with what we have here. Were you on the right track? Were you on the right track as we look at the next question? Our next question should be, yeah. I'm new in this class. Don't worry, you'll be able to catch up. Don't worry. Everything that we've done from day one was recorded, and of course, you'll be able to access it. Can you do the calculation on the range? Really? Which part, Eric? Which one do you want us to focus on? The specific one. The specific one. Okay, I think we did that. So I want you to do number one. Our total cost is equal to demand times purchase price plus demand over economic order quantity by ordering cost plus economic order quantity divided by 2 multiplied by holding cost. So what was our demand? Was it 60,000? Was it 60,000? Demand ilikuwa ngapi? 60,000 times purchase price. Under this range, purchase price ilikuwa ngapi? 260. So that is the first part, plus demand, which is 60,000, divided by economic order quantity, which in this case is 18,001. We multiply by ordering cost. What was the ordering cost? Was it 50,000? Someone to confirm? Was it 50,000? Yes. So from that, we need to bring in the last part, that is the holding cost. So holding cost is economic order quantity divided by 2 multiplied by holding cost. Holding cost tumeambiwa ni ngapi? 20%. 20% of the purchase price. So what is 20% of 260? 20% of 260? 52. So we multiply by 52. Multiply by 52. Multiply by 52. Good. I believe if you do that, you'll be able to arrive at 16,234,683. Is your question answered? Great. So let's move to our first question for this concept will be, will time allow us to do that? I believe so. I believe so. With the speed, let's move to question number 2B. Question number 2B of August 2024, CPA. CPA. CPA, August 2024, question number 2B. But I would love us to look at a question that has got everything, right? Where you are told to come up with the income statement. Though I can't see it here, we'll be able to look at it. So we want to look at what we call stock valuation. Stock valuation. If you look at your cost outline, which I believe you have, do we all have the cost outline? Without the cost outline, utashtuka tumemaliza syllabus. Utashtuka hapa. Is it August 2024? Question number 2. CPA. Course outline, that should be your first tool. Juu wengine watashtuka hapa tukimaliza syllabus. Wengine watashtuka hapa tukimaliza syllabus. So if you look at the course outline, I've just shared it in the group. So we are done with topic number 3. Under topic number 4, the other items, most of those things are theory, right? Most of other items there are theory. Most of the items there are theory. Good. So look at it. Question or topic number 4, 4.1, accounting for direct material cost. We talked about introduction to material cost, centralized and decentralized purchasing, essential requirements for material control system, right? Those are theory notes that you already have with you, right? Then we have periodic inventory system. We have perpetual inventory system, whereby you count your inventory on daily basis, right? Then there's another option whereby a company will be able to take stock of their inventory maybe twice in a year or once in a year, right? There's that company that will be taking their stock once in a year or twice in a year. And if you do it once in a year, you'll find that in most cases, some goods that were lost in February, you get to realize it when you get to December. But if you are doing it on regular basis, if you are taking care of the inventory on regular basis, let's say on weekly basis, at the end of every week, you'll be able to identify that, you know what, it is the last week that these goods were actually stolen. It is in last week that you're actually missing some goods here, right? So you'll be able to identify what has happened almost immediately and take an action. But now, if you wait for the entire year, some people shall even have left their work, have resigned, and they, let's say maybe they were involved, right, in the disappearance of those goods. Now, those are still theory. Setting stock level, I believe we looked at that. We did some calculation under setting of stock level. Maximum stock level, minimum stock level, average stock level, and of course, frequency of making an order, right? We talked about reorder level and reorder quantity. So at this particular point, I believe all of us are now able to differentiate between reorder level and reorder quantity. And of course, we also understand that if I'm not given reorder quantity in a question, I need to move with speed and locate economic order quantity. If still economic order quantity is not given in that particular question, I will go ahead and calculate economic order quantity. So that's what we've done. Then the next part of that question, we did economic order quantity and even looked at factors influencing stock levels, right? Factors influencing stock levels. Did we look at that? Will you give us a prayer break at 7? Definitely, yes. At exactly 7, we'll have that break, 5 minutes break. Did we look at factors influencing stock levels? Did we look at that? Did we look at, no? Watu hawana notes hapa. Hizo tulifanya kitambo sana. We did that. We did that in class. Watu wamesahau hizi vitu. Remember I told that you have all the notes. Sasa theory hatuangalii sahi. Theory tunaachana nayo. I want you to take it at a personal level in your house where you stay. Of course, there are these items that you normally have. You normally have some stock, right? If you go to your house, if you look at that particular house, there are these things that you normally have, the consumables that you normally have, you normally keep them, some stock for this or those items within a month, within a year, right? Within 2 years. Now, the duration you are going to take or the quantity you will be having in your house at any given time is normally influenced by a lot of factors, right? Is normally influenced by a lot of factors. Are you able to identify one of the factors? Why is it that you are only having 5 liters? You are only having 5 liters of cooking oil instead of 20 liters. Instead of 20 liters. Why are you only having 5 kgs, or let's talk about even 2 kgs of tomato instead of 40 kgs, right? What are some of the factors that influence the quantity or affect your decision on the quantity that you keep at any given time? Res, can you just mention some of those factors? Consumption frequency, thank you. Consumption. Frequency, right? Any other factor? Rate of consumption, daily usage, consumption level, storage space, thank you. Seasonality of products, thank you. Seasonality. Or availability, right? Maybe you get these items that are normally, for example, if you talk about, let's say maize, right? Let's talk about maybe maize, something of that kind. You'll find that there are those seasons that 2 kgs of this product will be 150. There are those times of the year or part of the year whereby you normally find it even at 90 shillings. So if you have the capability of acquiring more of this during this particular time, then of course you can have more units. Price change expectation, thank you. Price change expectations, right? Nature of product, perishability, right? Right? There are those goods that require regulated temperature, which you cannot afford, right? You'll find that there are some products which must be kept in a fridge, a regulated environment, right? So if you cannot have, or you don't have the capability to afford the regulated temperature, then of course you not keep more of that particular product, right? We've talked about price changes. If you are expecting increase in prices, which I've explained by this, then you'll be able to do that particular purchase. Seasonality and of course availability, we've also mentioned that. Storage of space, there are these goods that normally require huge space to be stored. And if you don't have that particular space, you only store that small quantity, which can be accommodated within that particular space. Consumption frequency, there are these products that you normally use once in a week or even twice in a month. So you don't need to keep a lot of units of that particular product, right? Good. For example, do you think there's someone who is having like, let's talk about 10 kgs between salt. So let's talk about 10 kgs. Someone has decided to have 10 kgs of salt. Is it a nice decision? You're having 10 kgs. How many years will it take you to consume these 10 kgs? Or how many months? More than a year, right? So you don't need to keep this particular product in large quantity. Good. Then cost incurred in holding the stock rate. So storage cost, storage cost, right? Storage cost. There's another thing that you are forgetting, which is superior to all these factors. What is it? Demand of the product. Of course, demand, you are now having this, you are now having, yes, demand, thank you, demand of the product, right? Good. There's some factor here, which is a major one. Production capacity or storage capacity, right? Production capacity or storage capacity. Cash flow. Economic order quantity is a factor. Thank you. I can see those who are making good use of our notes. I can see those who are making good use of our notes. Any other factor? Cash flow. You can be having enough space right? You can be having enough space, regulated temperature, but now you don't have money to be able to talk about affordability or cash flow. Good. Now, what we have mentioned here is not about, has got nothing to do with your personal stock. Lead time. Thank you. Another one, we have lead time here. Lead time. Lead time. Government and statutory requirements. Of course, there are those goods that you are required to have up to a given level, right? Good. Now, what we have written down here, what we have listed here, has got nothing to do with the quantity of salt, has got nothing to do with tomatoes, but it has got everything to do with factors. Factors influencing or affecting. We have it from the course outline. We have it from factors influencing stock levels. Factors influencing stock levels. Remember, stock can be raw material, stock can be finished goods, right? So consumption frequency, if your customers are coming for this product once or twice in a month, then I don't need to keep a lot of units of the same product. Storage space. If it is so expensive to be able to store this raw material, I'm dealing with bulky raw material. If they require a lot of space, then I don't need to store them, but I can organize with the supplier to be able to bring the quantity that I need to use for that particular day, so that I don't need storage space. Seasonality or availability, you'll find that some products are normally available in abundance during or towards the end of the year. So what do? I need to get more of that product at that particular time, so that when I need it, maybe in the month of April, when the quantity is actually low or supply is very low, I will still be able to continue with my production or sales. Price change expectation again. If we are anticipating increase in prices in the next 2 or 3 months, and this product is actually can be kept for even 1 year, what do I need to do? I need to get more money and have adequate stock, so that as the prices increases in the next 4 or 5 years, months, I will be able to enjoy that. Really? Okay. Then perishability, of course, if it cannot be kept for long without being destroyed, then what do I need to do? If it cannot be kept for long, then I need to have just the smallest quantity, which will be able to meet my demand at that particular time. Storage cost, right? Storage cost. There are those goods that require regulated temperature, which I've mentioned. So for us to be able to deal with that, I need to look at the sufficient or adequate quantity to meet what I need, not having excess, which will be stored, and of course will be increasing storage cost. Demand of the product, right? If whatever I'm having here as stock is what I will be reselling, then I cannot have more of it, yet demand is very low or fluctuating. So what do I need to do? I only need to get that based on the demand. Economic order quantity. I cannot purchase more goods in the name of enjoying discount, but I end up forgetting about economic order quantity. Remember, at economic order quantity, at equilibrium point, total holding cost is equal to total ordering cost. I must always ensure that I operate within the equilibrium point, right? So this one here will influence the quantity of goods you are going to have there, right? Cash flow. You can have all these factors being favorable, but now without money, again, you will do nothing, right? Without money, you'll do nothing. Lead time, very important. Lead time is very important. How long does it take you when you, let's say that is as at today, 21st. If you need a revision kit from RCM, how many days will they take to deliver this revision kit to Mandera? How long do they take to deliver this book to Nakuru? Right? So if maybe you want to use this book, it can be 1 month, right? It can be even delivering it to South Sudan, right? Because I believe we have our students coming all the way from South Sudan, right? If I want to deliver this book to someone in Rwanda, right? How long will RCM take to be able to deliver the book? So if you want to sit for your exams in the next 2 months and RCM is taking like 3 months to deliver this book to Rwanda, will it help you to prepare for your exams in the month of March? The answer is no, because it will be waiting for 3 months and you shall have done your exams. So again, that relates with lead time. That relates with lead time. How long will it take from the time you make an order to the time you will be able to do what? You'll be able to acquire the product, right? If you've made your payment, let's say you made your payment today at 2 p.m. How long does RCM take to give you access to all the classes through LMS? Very important, right? If you want to do a review of the classes and you made your payment at 4 p.m., how long will RCM take to be able to give you access to all the management accounting notes from topic number 1 all the way to topic number 10 before your 6 p.m. Class? How long do they take? So that interval, the interval between when you make an order to the time that you receive the service or the product, is also very important. So if they are taking 3 months and you're supposed to sit for your exams in the month of March, what do you need to do? You are to order for this product early November or even October, so that by 1st of January, 3 months are gone and you already have your product ready for use for the March exams. So that's also another factor to be considered. Another factor to be considered. Great. So are we together up to that point? Are we together up to that point? Are we together up to that point? Are these things making sense to somebody? Great. So having looked at the theory part of this concept, I want us to do valuation of our stock. I want us to do valuation of our stock. Now, those in the manufacturing industry, those who are working for manufacturing companies, right? You'll be able to see something here. Those who are working for even supermarkets, right? You'll be able to see something here. You'll be able to identify something that you normally interact with, right? Store management, very important. If you get someone who is lazy, you will end up, it's already 7. Oh, so let's have the 5 minutes. Actually, it will be now 6. Let's have the 6 minutes break. Then we get back and continue. So the break starts now. Your 6 minutes have started. Now, this is what you normally find yourself in, or where you normally find yourself in when dealing with the stock management. So you'll find that a company purchased inventory on 1st of January this year, right? They have opening stock, right? There is opening stock of 5 or 50 units. These 50 units were purchased in December at 1,500. So if they have to sell these 50 units, of course, they'll be selling them at a slightly higher price to recover the cost and any other operating expense. Then when you now get to 3rd of January this year, they're going to make purchases, right? So when they make purchases, they will be finding that, you know what? This product is no longer purchased at 1,500 due to increase or implementation of taxes from 27th of December 2024. The suppliers have decided to increase the price. So you've now purchased 70 units. At what price? They are now going at 2,100, all the way from 1,500. Without wasting time, when you get to 18th of the same month, January, you find that the same product is now, you do purchases again, You purchase 60 units. This time round, or 63. This time round, the price has slightly reduced to 1,900. Now the question lies with you. What will be the cost of these goods that you purchased if you are to do sales or issues? So issuing of goods, right? So issuing of goods, number one, on 4th or 7th of January, you sold 80 goods at, or you sold 8. Let's not bring the at here, which will again challenge most of you at this point. Good. So you have decided to sell 80 units. Yes, I'm just trying to explain. We are getting to the real question. Don't worry. I'm trying to explain this. What you're going to do from the past paper is this sitting. So don't worry. It's this one here. But I'm trying to explain to bring out the scenario that you want to deal with. Right? Now, if you look at this sales that was done on 7th January 2025, we have two things here. If you are to sell 80 units, you will find that you have 50 units which were brought in at 1,500 or your opening stock. You also have 70 which was brought in at 2,100. So I want to get the cost of these goods that were sold. I want to get the cost of the 80 units. So what will I do? Somebody will be having this option. Somebody will say, I'll be selling the first 50, the opening stock, or I brought them in at 1,500. So that is the cost, right? Plus, for me to get to 80, I need 30. So these 30 units, I'll take them from the 70, right? Which is 2,100. So if I do that, I'll be able to get the total cost of these 80 units. That is option A. Another person will come in, individual B will come in and say, you know what? I'm not going to do that. Right? I'm not going to do that. What will I do? I will be coming to this part. And of course, I want you to actually give me the answers so that we compare the differences. I want us to have that. So 50 by 1,500, what are you getting? 50 by 1,500. Make good use of your calculator, please. 75,000. How about 30 by 2,100? 30 by 2,100. 63,000. So that will give us 138,000. That is individual A. You first of all sell what was brought in, then you go and pick 30 from what was brought in on 3rd. Good. Individual B will say, you know what? I must get the cost. I must use average. So how will they get the average? They'll be taking 50 times 1,500, right, to give them total cost, plus 70 times 2,100. So wacha tufanye hivyo. 50 by 1,500, that is 75,000. 70 by 2,100, tunapata ngapi? 70 by 2,100, tunapata ngapi? 147,000. Good. Can you add the two? So this will give me 120. How about this? 222. Good. So can you get the average? It is total cost divided by quantity. What are you getting? Total cost divided by quantity. $1,850. So individual B will come here and say, you know what? I'll be selling 80 units on 7th at the average price. At the average. Is that part visible? Yes. 1,850 at the average price. So what are you getting? 1,850 by 8. 1,850 by 80. What are you getting? 148,000. Then individual C will be coming up with a proposal that, you know what? I'll be first of all, I will take what was brought in just the other day, right? So individual C will be selling the 70,000, the 70 units, which was brought in at 2,100. Then they now look for the 10 units to make it 80. These 10 units, they now pick it from the ones that have been there for the longest time. That is their opening stock at 1,500. So that will give us 70 by 2,100. We are getting 147,000. We are getting 1,500. That is 15,000. So if you added this, what are you getting? What are you getting? 162,000. Good. Before I give out any comments, have you been able to understand what I've done? Because if you understand that, we are done with the entire concept. We just go to the question straight away. Have you understand how we've been able to do A, B, and C? Great. Now, this is what we now want to put in our books. No? Monica, which parts are you missing so that I repeat very fast? Which part? Which part? Good. Now, I've said on 1st of January 2025, you add this closing stock, right? You add this closing stock. That closing stock for yesterday becomes your opening stock for today. So you're referring to 1st of January, we have opening stock of 50 units, which were purchased at 1,500. When you got to 3rd of January this year, you purchased 70 units at 2,100. The prices increased. When you got to 18th of January, you also purchased additional 63 units at 1,900. Right? Good. Now, on 7th, before you did the purchases on 18th, on 7th, you made some sales. You sold 80 units. You sold 80 units. What we are interested in here is the cost of what was sold. We've talked about stock valuation, the cost of stock which was sold. This is what 3 people have done. When they were told to give us the cost of stock which was sold, so individual A, right? Individual A has decided, or we can even use, so we have, let's talk about real names here. I hope it will not offend anyone. So we have Judith, we have John, and who else? And I can see Grace. Great. We have Grace. Now, when these 3 students were told to give us the cost of the 80 units, this is what they did. So Judith went ahead and said, first of all, I will be selling the opening stock, the 50, which was brought in at 1,500. Then for me to make it to 80, remember all of them will be selling 80. All of them will be selling 80 units. Then the remaining 30 to make it 80, I will be taking it from what was brought in on 3rd. And that's what Judith did. So 30 times 2,100. She was able to get the cost of the 80 units. And John went ahead. This is what John did. John went ahead and said, you know what? I cannot follow that procedure. I'll be getting the average, then multiply by what was sold. So how is he getting the average? First of all, he's getting the total value of what he has. The total value of his opening stock plus total value of what he purchased on 3rd. That will give him or gave him 222,000. And total units, 120. When he went ahead and divided total value with the quantity, he got 1850 as the average cost per unit. Then he said, that is what I will use as the cost. So he took 80 units multiplied by the cost per unit or average cost, and he got 148,000. Then Grace went ahead and said, you know what? No, that cannot work. I will first of all sell what was brought in at a higher price. So she went ahead and sold the 70 units at 2,100, right? Then, because she must sell 80 units, she looked for the 10 units. From which item? From the opening stock. From the opening stock. And that's what she did here. So 10 times 1,500, that will give her a total of 80 units, and this is the value. All these three students are right. Their answers will be correct. What we need to identify is which method was used by Judith, which method was used by John, and which method was used by Grace. Then after identifying the methods, I want us also to go ahead and get the value of closing inventory. And actually, I can see we don't have any business with this transaction that happened on 18. I think it will complicate the entire equation. Let's deal with that. Good. Now, if you've been able to interact with the notes that you are having, or even without the notes, if you've worked in a manufacturing or actually even a supermarket, if you've done costing under production department, you'll be able to help us here. So can someone help us identify the method which was used by Judith? We have three methods. Which method? So Judith applied what we call FIFO. First in, first out, right? That is why when she was issuing here or sales, she first of all released the 50 units, which have been there from day one, and then looked for the deficit from what was brought in. That's why we have 50 by 1,500, then 30 by 2,100. Good. How about John? How about John? He got the average and then used the average as the cost per unit. Right? So he used what we call weighted average method. Weighted average method. Of course, this method was tested in CPA August 2024. This method was tested in CPA August 2022. This one has taken a very long time. Good, so let's come to what Grace applied. Which method? Which method? LIFO. So this is what Grace did. She first of all went and sold what was brought in recently before looking at what has been there for the longest time. So she applied what we call LIFO method. Last in, first out. That's why she was able to sell what was brought in recently before looking at the opening stock. Right? Good. This I cannot recall the sitting, maybe under pilot papers before 2015. Before 2015. Good. Now, as per Judith, the cost of what they sold or what she was able to sell is 138. John, 148. The cost is now high, right? And of course, Grace has got the highest price or the highest cost, which is 162. What if these people made sales? They sold 80 units at 3,400. Will they have the same gross profit? Even though the selling price is the same, the items we are having here are the same, right? The cost of the goods up here, the purchase price is actually the same. But if you look at the method that they have applied to get the cost of the goods that were sold, they will not have the same profit. Even though the selling price is the same, the cost of these items up here is actually, the purchase price is the same. They will not have the same profit, right? Good. I want us to, let's see time. Okay, I want us to identify something. Are we able to get the cost of closing stock? Stock valuation. Can we get the cost of closing stock? Let's start with Judith, right? The cost of closing stock. She's applying first in, first out. We have opening of 50. We have what was brought in, 70. When she was making sales, she was able to sell the 50, and this 30 was taken from the 70 units. So our closing stock in terms of quantity, somebody, remember, quantity will be the same, irrespective of the method these people are going to apply. Quantity will be the same for everyone. How many units? In terms of quantity, you have 50 plus 70, that is 120. Minus 80 will leave you with 40. The remaining 40 units are part of this 70. So it is 40 by 20 what? 2100, giving us 84,000. That is the value of closing stock. Let's go to John. John applied average. Right? So can we get, of course, I know the quantity is how many units? 40 multiplied by, repeat closing stock concept. Okay, how do we get closing stock? So cost of sales, I want you to pick it from this point. We have sales. How many units were sold? They sold 80. How do I get cost of sales? Opening stock. Do we have opening stock? Yes, 50. Then we add purchases. We add purchases. Let me pick it from this point. How many units were purchased? 70, right? So this will give us goods available for sale. So this will give me 120. Goods available for sale minus closing stock, minus closing stock will give me goods that were sold, right? Minus closing stock. Now, I have 120. If I had 120 to sell and I sold 40, what is my closing stock? What is my closing stock? Which will be deducted? It is 40, right? So if I do this, I'll be able to get 80. That is what was sold. Good. So let's come back to this. John, what is the cost per unit? Cost per unit, it will still apply the average. Thank you. So 1850. Good. If you do that, what are you getting? What are you getting? I'm told it's 74,000. Let's come to Grace. So Grace has decided to sell everything that was brought in on that and take 10 from this. So the remaining 40 is from this opening stock. And what was the value of that? 40 times 1,500. What will be the value of closing stock? 60,000. 60,000. Good. Now, that is what you are required to do. And I believe you've been able to get the concept. So we have some things that will be introduced here. We have some things that will be introduced here. You now need to create time. Of course, when we do the questions, you'll be able to get them. How do I deal with stolen goods? How do I record stolen? How do I record stolen goods? How do I record return inwards? How do I deal with return outwards? That is it. If your opening stock was 50 and you brought in 70, you are expecting to have 120, and you only sold 80, you are expecting to have your closing stock of how much? Of 40 units. But if you go to the store, physical stock, you only find that you have 32. What has happened? 80 units have been sold. they are missing. They are not sold within the system. If your company is using the system, you cannot find it when it was sold. But if you go to the physical stock, 8 goods are missing. These are stolen goods. So how do I record stolen goods? How do I record stolen goods? They have been issued. Now, what you need to understand about valuation is stolen goods will be reducing the quantity of our stock, right? How about goods that have been returned? We made sales, but customers have decided to return some goods. How do we record them? If goods have been returned, what do we do? What do we do? We are going to record them under receipts. So anything you're going to receive, we record them under receipts. Anything issued, whether sold, stolen, or returned outward to the supplier, we record them under issues, right? Good. So we are going to have the table here. We are going to have the table here. You can have the date. We can have the dates here. We can have the dates here. Then we'll be talking about, we need to divide it into 2. Space will allow. Right, so we're talking about date. Talk about receipts. Talk about issues. Then, of course, talk about balance, if space will allow. So we need to have 3, right? We record the quantity. We record the cost per unit. Then we record amount. We come to issues, again, we do the same, units or quantity, cost per unit, then we have amount. Balance, we look at the quantity, cost per unit, then amount, right? Good, so we have quantity, cost per unit, then amount. Quantity, cost per unit, and amount. Quantity, cost per unit, then amount. Our question, our reference question is August 2024, question number 2B. Which method are we applying? So I want us to start with the method that was given in that question. Which method are you required to use in that particular question? Let's read it now. Maziwa Limited is a small company that specializes in buying and selling of powdered milk. The milk tins are packed in boxes. The company started its operation on February 2024 with a capital of 4 million. During the past period of 6 months, the following transactions have occurred. So we have powdered milk purchases, right? Then that is date of receipt, quantity in boxes, and of course, total cost. We have date of dispatch. That's now what was issued. We have quantity, total sales. What else? Additional information. The closing inventory counted on 31st of July was 500 boxes. General operating expenses paid during the period amounted to 23,000. The company uses LIFO method for inventory valuation. Last in, first out. Required, prepare store ledger account. Prepare store ledger account. That's August 2024. Really? Wacha tuone ni which sitting? Wacha tuone. August 2024. August 2024, unless we're having different questions. Question number 2B, CPA. Am I reading the right question? Am I reading the right question as per this guidance? I believe so. Good, so let's start with the first one. Let's start with the first one. Store ledger account, then income statement for the company of this period ended 31st July 2024. So we start with the, okay, we are given these things for the month of, for the year 2024. We have the dates here. 2024. So the first one, we are starting with opening stock. Do we have opening stock? Pick the first date. Pick the first date. They are talking about the closing inventory counted on 31st July. The closing inventory, sorry, the closing inventory. So do we have opening stock? Do we have opening stock 1st of February? First of February, do we have opening stock? 1st of February opening stock. Tuko nayo kweli? Sorry. Opening stock. Hiyo ni capital. Hiyo ni capital. Opening stock. Tuko nayo. Under what information? Powdered milk purchases. That is not opening stock. There's a very big difference between opening stock and what was purchased. Started operation in February. In February with a capital. So the starting amount is a capital, right? We don't have anything to do with opening stock. So our opening stock on 1st of February is 0. We don't have that, right? We don't have that anywhere. So there's even no need of putting it here. So let's move to the first transaction in the month of February. The first transaction happened on 13th of February, right? So 13th Feb. What happened? They purchased. So purchases, opening stock, receipts will be recorded under receipts. So we have 200 units were purchased. And we are using LIFO, don't forget, last in, first out. So 200 units of a total cost of 72,000. Can you give me cost per unit? Very important. Cost per unit, very important. Cost per unit. Ni ngapi? 360. Good. I want us to complete that transaction. Even if we have two transactions that happened on the same day, repeat the same date down there to record the other one. Repeat the same date down there to record the second transaction. That will help you to get everything correctly. But if you combine the two, you'll end up forgetting something that is very important. Good. So this is about receipts. Even if issuing was done on the same date, I have to skip this issuing first, then deal with this. So when you received 200 units, if you are to close operations on that day, you will be having 200 units whose cost is 360 and value is 72. And the value is 72,000, right? Good. What we have, remember, we have purchases and also sales. So you must look at the two to ensure that you don't skip any date. From 13th of February, what is the next date? Between 10th of March and 8th of March. Which one comes first? 8th of March. What happened on 8th? What happened on 8th? they purchased, right? So we have 8th March. What happened? Or March? Oh, you can start with the month, then date. There's no problem. Feb 13. March 8. So they also purchased some goods, 400, whose value is 152,000. Good. What is the cost per unit? 380. If they were to stop operations today, are we able to get the value of their goods? So in terms of quantity, they add 200, they have added, so they'll be having 600 units. In terms of value, which method are they using? LIFO, right? So they are not making any issuing at this particular point. Now, this is what happens. Remember, once you get to this point, the 600 units contains 200, which was brought in at 360, contains 400, which was brought in at 380. So what cost per unit am I going to put here? Is it 360? Is it 380? Is it the average, or I just leave it blank and concentrate on the total value? What cost am I going to put there? And of course, any response must be based on the method. It must be based on the method. When you talk about LIFO, we cannot take average. What if we write them separately? No. Once you get the value, this is the procedure. What will I put here? It will be blank, because if I take 380, I'm referring to the entire 600 units being brought in at 380. If I take 360, it means the entire 600 was brought in at 360. Is that the case? No. If I take the average, then I'm now using a different method apart from what I've provided in the title, right? So what do I need to do? Leave it blank, but have the value here as 72,000 plus 152. What are you getting? To 24,000. Good. Then from 8th of March, what's the next date? We have March 10th, we have April 11th. So let's deal with March 10th. What happened? Do we have return outwards? Do we have stolen goods? Do we have return inwards? On 10th, they sold the powdered milk. They sold the powdered milk. What we are preparing here, can you read the question 1? Roman 1 of this question, what are we supposed to prepare? Roman 1 of this question, what are we supposed to prepare? Store ledger account. Thank you. So let's now come back to this question. On 10th, they sold 500 units. They sold, so that is recorded under issues. So I come to this part, 500 units. So I want you to tell me something here. So what will I record? And amount? How much will I record and amount? How much will I record and amount? Before I get to cost per unit, how much will I record under amount? How much will I record under amount? Wacha tuone. Oh, thank you for that. So that one helped me to explain this once and for all. Putting 500 here is a mistake, right? Putting 500 here is a mistake. But of course, if you have decided to put it, then somebody is saying we are supposed to put 500 as the cost per unit. Don't write here. This is not the right thing. I'm just trying to explain. Alafu utapata ni 200 and what? Is it 250,000? Look at the title. Look at the title. When you are receiving these goods, you are receiving at cost. When you are now issuing, you are issuing at revenue. Anything to do with revenue should not find its way to your store ledger account. Anything to do with revenue should not find its way to your store ledger account. The selling price, the revenues are entirely required to be used in Roman 2 of the question. Roman 2, you are required to come up with an income statement. An income statement, you give us revenue, then you less cost of what was sold. So revenue should not find its way to your store ledger account. Are we together up to that point? Are we together up to that point? After this class, even though we are not going to complete this question, refer to November 2020 ATD past paper question. November 2020 ATD past paper question, and even November 2020 CPA, you'll also get a question of this kind. They have given you revenue column. Yes, no. Revenue, what I was trying to say is revenue should not find its way into your store ledger account. Anything you're going to record here, you record at cost. You record at cost. That is number one. That is number one. Number two, my choice of putting 500 here depends on, number one, the method. So before I record 500, I know they need 500. That's what was issued. I must go to the method. Which method? LIFO. Last in, first out. All right? We don't have opening stock. We have goods that were purchased on 13th. We have goods that were purchased on 8th. Based on our method, if I were to issue goods, which one will I take first? The one that was brought in on March or February? If I am to apply the method given up there, that is LIFO, which units will I record first, or which goods will I issue first? Is it the one that was brought in on 8th or 13th of February? Which one will I take first? We are using LIFO, last in, first out. So I know the total will be 500, but I cannot record 5. Why? Because the one that was brought in last is not giving me the entire 500 units. So I'll come here and issue the 400 units, which was brought in at 380, giving me 152,000. What was issued on 10th of March was 500 units. So I must issue the entire 500 units. My total down here must be 500. Are you able to recall my illustration up there before this was drawn? Are you able to refer to the illustration? I believe you wrote something there. Can you recall how you are doing it? The 3 students, that is Judith, John, and Grace. Can you recall? Thank you. At the end of the day, you must have your 500 because, for example, if you look at that illustration, Judith had 70. Judith had 50 and 30. That gave her 80. John took 80 directly. And of course, Grace had 70 and 10. All these people were having 80 at the end of the day. That is what we are trying to deal with here. At the end of the day, you must issue 500. So I've issued 400, which was brought in on 8th of March. Where will I get 100 from? Where will I get 100 from? The goods that were brought in after the 8th March. That is 13th of February. So it means what will be the cost per unit for the 100 units? 360, because I'm picking it from purchases on 13th of February. So that is 360. It will give me. So can we get the total? Can we get the total? 152 plus 36,000, 188,000. Great. I want us to do 2 things, and then we'll be able to help ourselves. So what we are going to write here outside this table here is not necessary, but of course you can do it in a pencil to be able to reconcile your data. Before you complete anything, you can easily identify an error under this particular point. So this is what we are doing. On 8th of March, you brought 400 and you've issued the of 400. Then 13th of February, you brought in 200. You've only taken 100 from it, right? So you can say on February, you brought in 200. Then here you brought in 400. If you are doing issuing, you've issued the 400. And from here, you've taken only 100. You are remaining with 100 units. I want you to take 100 that is remaining here times the cost per unit. That is 360. It will give us 36 what? 36,000. That is what we have. Can we compare it with what we are going to have from the table and see whether we are right or not? You add 600 units. You have issued 500. How many units are you remaining with here? 100 units. You add goods worth 224,000. You've issued goods worth 188,000. What is the value of what you are remaining with? 36,000. Compare this with what you are having here as per this temporary workings. Are you getting the same thing? If you compare that as per your temporary workings there, do you have the same thing? Great. So that's how you confirm whether you've been able to do the right thing or not. Whether you've been able to do the right thing or not. So your 100 units have not been issued, and that is the closing stock, right? That is the closing stock. Repeat 100 in the balance column. On 8th of March, you brought in 400. You added to your existing 200, which gave you 600, right? So this 600, the total value is 224,000. On 10th of March, you've issued 500 units, whose value is 188,000. So if I add 600, whose value is 224,000, I've issued 500. Cumulatively, their value is 188,000, right? So I've issued these ones. What is the balance? 600 minus 500, 100. 224 minus 188, I'm told it is 36,000. Is it clear now? Yes. We are leaving cost per unit blank. Actually, under balances, the only one you are going to record is the first one. Any other thing down here will be blank. Under LIFO and FIFO. Under LIFO and FIFO. Oh, great. Let's look at the next date if something happened. On the next date from 10th of March, what is the next day? I can see 20th. I can see 12th May. I can see 11th April. So the next date is April 11th, right? April 11th. So what happened? They received 600 units whose cost is 240, value 240,000. So what will we have here? Cost per unit? 400. 600 here. Good. I will also have this, my temporary space here. I've received 600 units, right? Good. So can we record what we have as at this particular time? I have 100 plus 600 giving me 700 units. Their value 36 plus 240,000. What will I have? Is it 276,000? $276. Good. What happened? Next date, we have 12th May, right? So we have 12th of May. Something happened. They received 400 units. So we bring 400 here. Then 400 units were received and their value is 140,000. What is the cost per unit here? 350. Can we get the value of the goods? Can we get the value of the goods? 700 plus 400 is giving us 1,100. Good. 276,000 plus 140,000. Itakuwa ngapi? 276 Is it 416? That is what we are getting as per this table. Can we confirm that that is actually true by using these workings down here, right? So I have 100, which was brought in at 36 or 360, giving us 36,000. I have 600, which was brought in at 400 to 40,000. I have 400, which was brought in at 350, and it gave me 140,000. Can we add in terms of quantity? 700, 1,100. About value? Are we getting to the same point? Are we getting to the same point? Good. So do we have 416,000 here? Great. That's how you compare your workings. That's how you reconcile and confirm whether you are right or not. From 12th May, we have 20th May. So we have May. What happened on May 20th? May 20th, they sold 600 units. They sold 600 units. We are using LIFO, last in, first out. Oh, there's something that happened on 15th. Tuangalie 15th. No, 15th is July. If you go to the sales column, we have from 12th May, we have 20th May. Are you able to see that? John, confirm? Yeah, great. So 20th May, they sold goods. How many units? 600. That's what I need to get. We are using which method? LIFO, last in, first out. So if I have to deliver the 600 units, which one will I start with? Mention the date. Which one will I start with? Will I start with May 12th or February or 13th of February? I will start with May 12th because I'm using last in, first out. So I have to sell this, the 400 units. So if I look at 400 units here, is it giving me what was fully sold? No, it is still less. So I deliver the whole of this at 350 to give me 140,000, right? I have to make it to 600. So this one is fully taken. Then I need to get 200. Where will I get 200 from? Is it from April 11th or February 13th? April, right? So I will come and get the 200 here from what was brought in April at 400. So that will give me 80. Good. From this 600, I've only taken 400. So I'm having a balance of how many units? 400. So come and add this to give us 600. Come and add this to give us 220,000. Compare this 100 by 360 plus 400 by 400. That will give me, so 400 by 400, that is 16. 160 plus 36,000. That should give me 196,000. I expect my table to also reflect the same. Let's confirm. In terms of quantity, I should be having 500. So 1100 minus 600 will give me, hey, 𝗤𝗿𝗶𝗶𝗴𝗲 mapema. Where are we getting 800 from? They need 600. I first of all start with what was brought in May 12th. There were 400 units times 350, giving me 140. I have to make it to 600, so I have 200. Where will I get 200 from? 200 tunatoa wapi? From what was brought in on 11th of April. Why? LIFO method. LIFO method. Last in, first out. I start with this. If it is not enough, I go to the next date as I move upwards, right? So I come and pick the remaining 200 from 600, right? So that's what I'm getting 200. What was the cost per unit of these 600 units brought in on 11th of April? 400. So 200 by 400 is giving me 80,000. Great. So what do we have? 416 minus 220 ni ngapi? 416 minus 220. 416 minus 220. 196,000. Is it equal to what we are getting there as per the workings? Yes, so that's how you deal with it. I have forgotten that I had another class after this, so we have to stop. We have to stop. I've shared a link for a video guiding you on how to, number one, log into the class. Number two, access notes from topic 1 to topic 10. Number three, access past paper questions. The theory questions and answers up to December 2024 are already available in LMS. If you want notes, LMS. Videos under the same topic or a different topic from previous semesters in LMS, right? So the moment, of course, currently they are doing maintenance. Once that is done, just listen to that video and you'll be able to access everything. I will not share important notes or anything in the group, no. Let that group be for stories. Let us make a lot of stories in that group, but important things, our notes, our learning materials, let us access everything from LMS. Why? Because in a group, we'll have to share it every time someone is admitted, we have to reshare everything. But in LMS, hata ukiingia sahi, you access everything without interfering with others. That's why we have decided to choose that platform. But if you're not conversant with it, we can actually change. Forget about LMS and post everything in the group. So it is upon you to do what? To decide. Good. Thanks for your time. Have a blessed night and let's meet on Friday.